Hello and welcome to the special MF Corner YT edition, the YouTube edition that is, and we explain to you concepts, break it down for you and get an expert advice as well on the show. Today joining us is Kaustubh Belapurkar, who is the Director of Fund Research at Morningstar Investment Advisor India Private Limited. Kaustubh, always a pleasure speaking with you and getting your insights on various aspects of mutual fund investing. So welcome to the show. And today we are going to start talking about the international investment via mutual funds, because that has been a big talking point, but there have been a lot of changes, the tax collected at source in international transactions. How has this changed things, and what happens when we take exposure via fund of funds? So let's get started, Kaustubh. I just want to understand first up, considering whatever is happening in our markets, is there a lot of interest that we are seeing in international investing still? Do you think that it is the right time to tap into international funds because there's a lot of macroeconomic volatility?
Hi, Sonal. Thanks for having me on the show. And I think very interesting time to have this conversation, right? And I mean, when we think about what's, and like you laid out the context of what's happening globally and in India, I think, any time as any is a good time to buy into international funds. And I'll lay out a few theses why we think so, right? So we all talk about diversification of portfolios across asset classes, and here presents an equity asset class which is very, very different from the Indian equity asset class. From the context of obviously the returns over different time frames. So if you see in more recent times, 2022 was exceptionally bad year for say US stocks, but Indian equities did well. That has changed year to date in 23, and I think this we've observed over varying periods of time. That markets can move in different directions at different points of time, and that aids in terms of return diversification. And that's great. The other thing that also international investing does is gives you exposure to companies that you may not necessarily have exposure through an Indian stock market perspective, right? We all know, our index is heavyweight in certain sectors like financials, technology, and a couple of others. You get a much more sort of broad-based exposure in companies, say, in markets like the US, either through the NASDAQ or the S&P. And they're companies that, all of us are exposed to as consumers, right? Your Amazons, your Netflix, your Nvidias, your Metas, and of the world, the Googles of the world, right? So I think that's the other interesting bit in terms of exposure, taking exposure to some of these leading companies across the globe, which you otherwise wouldn't have exposure through. So I think any time is a good time to buy into international investing. You just have to obviously figure out, which are the markets you want to invest into, or you can take a broad-based exposure, across some of the larger developed markets.
Okay, that's an interesting take, because important for investors to understand as well, because as you said, it gives a better exposure and diversification opportunity as well. But how do they go about it, Kaustubh? One way is through fund of funds. Do you think that's the way? How can an investor go ahead and normally invest in international funds?
Yeah, sure. That's a very important point to discuss, because obviously there are two routes if you think about it. One is the domestic fund of fund route, and I think that's a great vehicle for most Indian investors to look at. In terms of you're buying into a rupee denominated fund, which eventually goes and invests into a national asset class, right? So it could be into a national fund, can be buying stocks or an ETF or a mix of those, right? So I think that is a very, very interesting way for a local investor to take exposure to. The other route obviously is through the LRS route, which comes, and now with the additional sort of like you referred to, the TCS baggage, so to speak, in terms of tax collector at source. So that would be the other route, but that involves a lot of paperwork and things like that. So I think there are enough and more options available through the domestic fund of fund route, which will allow you to take international exposure, which is a great way of, I think, for most investors to, because it allows you exposure, to varying markets, right? So you have US-based funds, ASEAN funds, European funds, and obviously some country-specific funds. So I think while it's not of the whole product bouquet, I think it's a reasonable product bouquet to start with for Indian investors. And I would definitely obviously think about that. Obviously, the challenge which has emanated over the last year or so, these funds have become popular in the last few years. And what that did was, there's a $7 billion cap that obviously has been put on the overall investments these funds can make. And, sometime last year, that cap was very close to being breached. So SEBI had kind of sent out a diktat that do not, open these funds for large investments. I think, that's something investors will need to be wary of, because that limit remains as of now. Obviously, there is some headroom for certain funds to still continue to take on new investors. But, that's something that we need to kind of just evaluate when you're looking to invest in funds.
Absolutely. I was going to take up that point, but you've answered it already, because last year we did see a lot of these funds stopping any more applications for international funds. A few of them have opened it now, but of course it remains to be seen since there's so much clamor for international investing as well. But an investor would like to know, how does it cost them, getting into a domestic mutual fund versus getting an exposure to international funds via fund of funds? How does it differ in terms of cost? Is it costlier for an investor to do that? What is the taxation like for fund of funds?
Yeah. So I think in terms of expenses, the good part is that SEBI made sure that even if you're feeding into another fund, they've capped the overall expenses even for international funds. So, it's not like they're going to be, they're almost at par, obviously, with domestic funds. So I don't see that as a disadvantage, so to speak, because a lot of these vehicles, they buy into anyway, super cheap if you're buying ETFs or even some of the funds, where the expense ratios are lower. And, the SEBI norms allow for, capping of expenses, the total expense ratio, taking into account the underlying fund expense ratio, which is great, right? So I think from that perspective, investors are well taken care of. Obviously, in terms of taxation, I think that's a little bit of I wouldn't say disadvantage, but, a step back, because when you're investing in equity as an asset class, obviously for domestic equities, you have, a more lucrative tax regime. But international funds, even if, which are largely all equity investments, but you are getting taxed as a non-equity. So, and especially with the more recent change in rules, you will be taxed at your tax rate, your tax slabs. So, that's something that investors need to keep in mind. But I think, the one important thing that, you need to think about, while tax considerations are important, you shouldn't be starting your investing decisions by making those. And, for some of the reasons that are articulated in terms of, the diversification benefits, the exposure that it gives you to companies and markets that you otherwise wouldn't have, definitely outweigh some of the disadvantage or, that comes along with the taxation. So I would definitely urge investors to use that opportunity, to look to invest in funds. And I think the other thing that's important to keep in mind, and, you spoke about is at a good time, because we've seen that investors tend to come into these funds when, they've already delivered outsized returns. I would say that always be present. Let these funds be a part of your portfolio rather than trying to, take knee-jerk exposures, because really you want to be invested in the long term as you are in Indian equities. That's where you can really enjoy the ride of, because they are also volatile, right? So we've seen 2022 was an exceptionally bad year, like I said, for NASDAQ and the S&P stocks, for instance, especially the NASDAQ stocks. And this year has been a great year. But, had you pulled out your money last year, as we saw for a certain bunch of investors, they would have actually missed out on the ride for a large part of the year. So I think that's something investors need to be cognizant of when they're investing in international funds.
Okay, that's sane advice and absolutely needed, because they should not just go ahead and chase momentum and keep fundamentals in mind while they're doing that in domestic investing as well. Kaustubh, always a pleasure speaking with you. Thank you so much for your insights today, especially on the international side of investing. As you said, a great time to take exposure into that side of the asset class as well. A pleasure speaking with you, but we'll take your leave now. And thanks to our viewers for joining in as well. But stay tuned to CNBC-TV18 for more news and updates.